Yo, 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 guys. Back with the videos. Um, just gonna do a quick run through on Euro USD this week. Um, I'll run through the trades that I did, all the setups that happened on each particular day. Um, I'll also show you one of the losses that I took this week, and yeah, just essentially how I view the market and solutions to problems, positives from the week and negatives from the week. So let's start with Monday. Um, yeah, the 23rd of August. So on Monday, we had, I believe we had some medium impact news on Euro USD. So we had high impact at 3:30, but during our New York session, between 7 and 11 generally, we had some medium impact news at 9:45. So we expected some level of volatility injection during that time. Our bias was based on the 4 hour. So essentially, we just look for the 4 hour order blocks. So we see we have this down candle and a move up. So clearly, um, we were bullish, and I expected price to fill this gap here. I expect price to fill this gap here and reverse after hitting this H4 order block, as you would see it kind of did here as well. But back to Monday. Um, so we have our directional bias. So we look for a purge and revert, meaning stops being purged and then moving to the price moving to the upside. So here we see price fill this gap, this hourly fair value gap, as well as we have these wicks coming down here. When we go down to the 15-minute chart, there was definitely trap traders here. This movement back down to fill this gap is a clear indication that we should be moving to the upside, but we wait for further confirmation. So we can consider this a purge. You can see we have this wick down here. So we can consider this the purge here. So we look for three things: purge, revert, and then an optimal trade entry. So we have here, we have this liquidity purge here. So based on ICT's concept, once the purge occurs, we look for that purge candle's high to be broken, and I like to get a retracement back into this purge candle to the upside, because this essentially becomes our order block. So I would label the high here, so stops purged. So we have our first step. Let me remove this. Have our first step down, purge, revert, and once that occurs, we essentially simply wait for an optimal trade entry. So when I showed up to the charts, saw this wick down, fill in this fair value gap, consider this the purge. This, I would consider this the revert once the high is taken. It's also wise to possibly put the high over here, use this high over here, because this could be one. So this is possibly a 4 hour order block forming, but let's just stay on the 1 hour chart. And when we see down candles like this, like 3 successive down candles before they move up, we'll consider all of them the order block. So you could use the high of this candle, and essentially once those two things are done, I simply look for a gap below the revert line or inside of the order block, and I simply look for an optimal trade entry We look for the optimal trade entry to line up with the gap, and honestly that's the entire process. And you'd see that this happened every single day on Euro USD this week. So as we could see here, price came right back to the level, but we missed this entry because we only take entries after 7 a.m. We only take entries after 7 a.m. So you would possibly look for another optimal trade entry, which was right here. We have this gap in here as well again. So we like to see price fill in gaps and then move into the upside. So I actually took this trade on Monday. And as you can see here, price came all the way back down to the original 62% level. So patience is key. I remember getting this trade somewhere at around the 80 level. Yeah, 180. So I tend to take entries at 70, 20, and 00 levels. Another confluence was this order block, this 5-minute bullish order block. So could have easily had nice framework on this trade. On the high there, stops right below this low, 10 pip stop. Let's target 20 pips, or we could look back 3 days and look for an old daily high. So this is 1, 2, 3 days, 3-day look back. This is a previous daily high. That's our drawn liquidity. As you can see here, that's nice 25 pips, but I only look for 15 to 20 pips per day, per trade, not every day, once I see my setup here. So this was on Monday. Nice trade. Could have honestly held for the week, but I just prefer to be in and out. So that was Monday's trade. I ended up catching Monday's trade, and then let's see. Alright, so that was Monday's trade. Then on Tuesday, same thing happened again. So let's just put Tuesday. So keep in mind, we had this fair value gap to be filled. So I took a loss here. I believe I took a loss. What day did I take a loss? I think I took a loss on Tuesday or Wednesday. Let me look at the price action. Oh, so I traded on Monday. I missed this trade on Tuesday. Then I took a loss here on Wednesday. And then I took a win here today on Thursday. So let's review this Tuesday trade that I missed. So we go down to the hourly chart. Remove all this old stuff. Clean up the charts. Alright. So we have this low clearly being swept. This one here as well as this one. So let's use this low because it's obvious. Price purge that low. Price purge this low. Keep in mind, we kind of filled the gap here already. Not kind of, we did fill the gap. Well, a good portion of the gap was filled here. We didn't fill the entire thing. But when we showed up to the charts, there was still room for the gap to be filled here to the upside, because this was the actual move we would have been in. So the stops were purged. Remember, we look for 3 things: purge, revert, and then an optimal trade entry. So we have the purge occurring here. As I said, the purge candle is high. Put something on that purge candle is high there. Right. So let's do it step by step. Purge. So the revert would have occurred on this candle. On this candle, we'd have gotten a confirmation. Alright, once that confirmation occurs, we look for an optimal trade entry. So this could have possibly been one. See, there's a gap in there. But I think I missed this entry first. Let's say you missed that first entry. It ended up coming all the way back and moving to the upside. Now, let me kind of explain why there were two movements, and this was possibly two entries in one day, two nice trades. So you see, the first trade was we had the hourly purge and revert here. So this was the H1 high being broken. Right, hourly purge and revert, 5-minute OTE with a fair value gap. This is the fair value gap here. Let's extend that bad boy out. So swing low to swing high, plus the fair value gap. Alright, stops right below the low. Let's say you want to be conservative, you put your stop loss below this order block, instead of just below this low, just to be safe. Easily got your stop loss down to 8 pips. You target the liquidity above this high and above this high, right? So that was 8 pips, 16 pip trade right there. It would have been out, in and out. That's 2 hour, right? So let's go to the 4 hour chart, and you'd see why we had two retracements. So we had a purge and revert on the 4 hour chart as well. So when price swooped below these lows, you see the hourly high is actually the opening price of this 4 hour order block, because price is fractal and they all kind of fold into each other. But we have this 4 hour high that we wait to be rated, and then we could get a more powerful optimal trade entry or a more powerful price displacement, because it's based on a higher time frame. So once that high is broken, the 4 hour high, once that 4 hour high is broken, we look for a fair value gap in here. See it right there. See the gap in there? Alright, perfect. Swing low to swing high. Swing low to swing high. The 62 is a bit higher. Swing low to swing high. So in a scenario like this, I would adjust the level to whichever one lines up with the fair value gap. So that would most likely be the 70.5. Enter right there. Enter right here. Probably the OO level, 17400. Yeah, it's not exactly on the 70.5% level, but the fair value gap is more important. Stop loss, you can put stop loss right below here. 8 pip stop. So it would have been your trade back up to these highs. There would have been liquidity here. Let's say you just look for 2 hour. So you had one 2 hour trade here based on the hourly, and then you look for another 2 hour trade based on the 4 hour. Same setup, same pattern. Oh, sorry. 16 pips alone is what we need. If you had a 10 pip stop, you'd look for 20 pips. And yeah, I mean, you could have held for more, but I just like 2 hour in and out. Keep it simple. If you want to just go for 20 pips, regardless of your stop loss, that's fine as well. So that was Tuesday's trade that I missed. And the main reason I missed it was because I didn't eat properly the night before, and I just didn't like how I was feeling behind the charts. Sounds ridiculous, but yeah, I believe that like those things super important to focus. So that was Tuesday. Nice 2 hour trade on Tuesday. Two actually, two 2 hour trades on Tuesday, one on Monday. I mean there were more trades here, but just based on this pattern alone, we look at how many trades. We look at how many entries you will get based on the purge and revert pattern. Here now we have the losing trade that I took and my perspective. So, as I mentioned, I expected price to fill this 4 hour fair value gap, and then I expected some level of price retracement from there. So when I showed up, you can see here that there was a stop on. So you see these relatively equal highs. Price stopped. Price had a stop on here. So this would have, I consider this my purge. Consider that level my purge. And then the low of that candle, once that's blown out, revert. So I came here and I expected this fair value gap to be filled in line with the optimal trade entry. So again, you'd want whichever level lines up with the fair value gap, which was the 79% level. That would have been that was my entry. So I got like 10 pips profit around there, like probably 13 pips. So if I had taken partials off at plus 10, I wouldn't have taken a full stop. So that's kind of like a lesson in taking partials. And then price shot up and reverse. I had a 10 pip stop, so my stop got taken out like around here. And as you can see, price continued to rally to the upside. So I saw the opposing view, when in reality, when you look at it in the proper way, which I'll show you now, the perspective that had the winning edge on this particular day was bullish, because at the end of the day it's gambling, and my trade and your trade could be within the same price move, and we have two totally different perspectives. So like for example, on that last sell entry, that was a 10 pip trade. Like if I looked for only 10 pips, then that would be a successful trade, but because my framework was for 20 pips, it wasn't a successful trade. So really and truly, it's just about your framework and however you perceive the market. So this is what happened. So they actually purged the liquidity down here. So this low got purged, more so this low, and this is London's low. As you can see, we have the London kill zone color. So there's obviously liquidity below this low. Once that liquidity is purged, we wait for the purge candles high to be taken. So once this purge candle occurs on the hourly, I simply go straight down to the 5 minute. This high comes in at 17416. So I like to be very precise with my analysis. So once that occurs, so we have the purge, now we wait for the revert. Alright, once that revert happens, we look for a fair value gap on the 5 minutes. See, we have a nice fair value gap here with an order block right here. So you could have possibly gotten in right on the order block. I just like to use the optimal trade entry because I could just pull the fib and my risk is managed. I know where I put my stops. I could have an idea as to where I want my targets to be, etc. So I use this swing low instead of this one because, as you can see, you want, excuse me, you want the Fibonacci to line up with the fair value gap. So this could have easily been your entry right here. Yeah, so I mean, if you had placed your stops right below here, you probably would have been nipped out on this candle. But obviously you want to be a bit realistic with your stop loss. That would have been a 6 pip stop loss. Like, my stop losses are usually 8 to 10 pips, 8 minimum. That's if I'm extremely confident. But generally it's just 10 pips, you know, like standard 10 pips. And we target this high, or you just simply target, we look back 3 days, target previous daily high. So the reason why I thought we were going to be bearish was because previous daily low was taken out. This is the previous daily low. So once they swept that low, I assumed that the algorithm switched to targeting daily lows. So I was wrong about that, but this game is just probabilities. We never know what's going to happen next. So it's looking for 20 pips, which takes you perfectly back to that high. I mean, there's no coincidence that 20 pips lines up perfectly with this high. There's no coincidence at all. And then we have the previous daily high. You see price toyed around it there. Got some liquidity built from here. Some people sold here, and then they just went to their initial target, which was the previous daily high. Let's say you took something right before the previous daily high at 17,650. That would have been a nice 2.8 hour trade. So that was my losing trade, and how I could have seen it the other way and be profitable, but it's just part of the game, guys. This game is probabilities and risk to reward. So here now, today on Thursday, we clearly had the same setup, the same pattern, and price is obviously overbought. We are at an extreme premium. So let's do the same process every single day. So Monday we had the process purge, revert, OTE. Tuesday we had the process purge, revert, OTE. Wednesday we had the process purge, revert, OTE. And now today is Thursday, so we expect most likely a reversal today. So once we had the stops over here being taken, purge, this here would have been my revert candle. As you can see here as well, remember the same pattern that we have on the 5-minute time frame, whereby you look for a fair value gap to be filled. We had an hourly fair value gap here. You can see how perfectly price fills the fair value gap. There's no doubts that price came just to fill this gap. This low comes in at 17,675, and this high comes in at 17,675. So this is why I don't usually trade on Thursdays. I like to look at Monday to Wednesday. But this was too textbook to not engage. But anyway, this would have been my revert candle. So we have the low of this candle. Once price trades back up into there, we look for a sell. So we had purge. Once the purge occurs, we look for revert. Now look at this, guys. Let's look at price like this. So we had the high being taken out. Let's say you use this candle. as the purge candle, which it really is, right? Once this low is taken out, actually let's go down to the 5-minute chart immediately. Once this low is violated, we look for an optimal trade entry. You see how quickly price does it. Now, we probably missed it. So right here, this one candle did both things. So the revert was confirmed here. There was a fair value gap here. This is a gap in price. There was a fair value gap here. Price hit that low, fill the gap, back to the downside. Now, based on our rules, once we are above this line, we could look for sells. And this is during our time window as well. So that was a possible great entry. Price came back in for another stab. Swing high, swing low. 62%. Keep it simple. Keep it simple. That would have been your entry. Come on. Alright. Stops right above here. You don't want to be ridiculous with the I mean, you could be, but let's just get a stop loss. 8 pips. So you can see the stop loss was pretty safe. Targeting these lows. Let's just say you go for 2 hour. That would have been a lovely trade to the downside. A lovely trade. As you can see as well, price came back for another stab at the 62% level. So that's why I like to set my 62% level, set my limit orders, and price either fills my order or not. But I am demanding price at my price. Because as you can see how algorithmic it is, price breaks the low again. Price breaks this low again, and look at what immediately happens. A reversal, back up here. What's this in here? A fair value gap. Oh no. Move this line. This is a fair value gap in here. See? Same shit. Fair value gap filled. Hit the 62% level. We back down to the downside. I actually didn't get this specific move. I waited for this low to be taken out. I waited for, I guess, just more confirmation. So you can be a bit more aggressive once you see a pattern up here. So once this low is taken out, go down to the 5-minute chart. What do we look for? So the purge occurred, the revert. What do we look for now? A 5-minute optimal trade entry with a fair value gap. Fair value gap here. Let's do the 5-minute OTE. Swing high to swing low. Why did I use this high? That's for you to figure out. That's for you to figure out. Follow price. Follow price. As price moves down, you move your thing with it. Your Fibonacci with it. Come on, guys. Come on, guys. Come on, guys. Come on. How is this not algorithmic? And just to show an example of how precise things are, how algorithmic prices. My setup was 10 pip stop, 20 pip TP, right at this level here. 60 level, we had the 80 level. Probably wouldn't have gotten filled with the 80 level. Let's keep it simple, right on the 62% level. 10 pip stop, 20 pip TP. Look at the precision. 20 pip TP, guys. 20 pip TP. I got out right here, and then price just consolidated I mean, most likely we head into the downside to fill this gap in price. Most likely head in here to fill this gap in price and take these lows, these equal lows as well. So yeah, that was just this week thus far. I want to talk about probabilities. So on this day, I saw my setup, took my trade. Let's say you risk 1% per trade. So 2 hour, risk 1% here, you made 2% on this day. Right? You're just following rules. You don't really care about the outcome. You just know you have statistical edge. Risk 1 to make 2 here. On this day, I missed this trade. Let's say you did get it. Risk 1 to make 2 here. That's 4%. This day, I lost. So let's say you risk 1 to make 2. You lost 1%. On this day here, you made 2%. 2, 4, 6 minus 1. That's 5% in 1 week. Just following your rules. Obviously, we're being conservative. Because let's say we did get an entry down here. Let's say you held for 3 hours on each of those trades. Same 10 pips stop that we usually get, but instead of that, you're holding for 30 pips. So this was one day, and I'm not just sugarcoating it. Remember, we only take entries below the high of this candle. So we definitely did get in here. Nice 3 hour trade, 10 pip stop, 30 pip TP. So that's 3 hours. We could have easily made 3% there. Purge and revert. Inside this candle, we'd have gotten the entry. Let's say we got in exactly at the worst point, which is the high. You wouldn't have gotten 3 hours immediately. Actually, this is a perfect example of why setting your trades up with a 2 hour framework and just taking it is perfect. Let's say you had a 10 pip stop in here, 30 pip TP. Price never hit your 30 pip TP. But the following day, price did take your stop loss. So you would have taken a loss unnecessarily when you could have easily taken something off or taken the whole trade off at plus 20, call it a week. So that was this week. The positives, I would say my psychology was impeccable and I followed all my rules every single day. I wasn't affected by the loss. I took this trade like nothing today following the loss. So that was a positive. And drawdown or downside would be maybe being scared, I guess, because I missed this move. I didn't eat properly, but I missed this move because I was like, I'm not sure. The fair value gap is here. I don't know if we'll get a reversal. So fear of taking trades. So I guess all the problems were psychologically rooted this week. But fantastic week regardless. Still finished green. So I took a win here, missed trade here, loss here, win here. So out of three trades I took in this week, I won 2 and lost 1, which is perfect. I don't necessarily love taking losses, but I love having a rule-based system whereby you do incur losses, because I think it's a sign of true execution of your process and true execution of a rule-based system, because you're not aiming for perfection, you're just aiming for executing your rule-based process with a statistical edge, and just having faith that that edge would allow you to be profitable at the end of 10, 50, 100, 90 trades over a series of trades. So I hope this video was helpful, and we'll keep in touch. We'll keep in touch, guys. Until we talk again, stay safe.